Welcome to today's video. I'm Richard Chapo. I'm an attorney in San Diego, California, and I've been representing online businesses for, about 20 years now. The subject of today's video is insurance for an online business. I know, very exciting. While it may not be that exciting, the truth is this is a very important subject for online businesses. Insurance is really the thing that's going to be there to save your hiney if you have one of those really bad days where the proverbial crap hits the fan. So we're going to dig into it, hopefully in a simple enough manner that you'll be able to get the key points without getting bored silly. Before we start, I have to apologize. I have a bit of a cold, so if my voice sounds stranger than usual, that's the reason why. So I'm often asked by people at conferences and what have you, do I really need insurance? I formed an LLC and everybody's telling me it'll protect my personal assets. What do I need insurance for? And the answer is yes, an LLC or a corp will protect your personal assets. If assuming you set it up right and you're running it right. But that's not the only concern when it comes to getting sued. And to show you why, let's just look at an example. Let's say that you start a website to sell products. You're selling affiliate products and everything's going well, and you develop your own product and you're selling that product. And everything's going well. And about 4 months down the line, you get wind that one of your products had a defect with it, and it exploded, and it severely hurt a young child. Next thing you know, a lawsuit's being filed against you for product liability and a couple other different legal claims. Okay. Well, at that point, you have your business entity in place. So your personal assets really aren't at risk. But of course, you have a lawsuit. What are you going to do with it? Well, your first step is to find a defense attorney who can represent you in the case and fight the claim. And once you identify that attorney, they're going to want a retainer of, $10,000 to $20,000 just to get started defending that. They're going to have an hourly rate, and you're looking at potential attorney's fees of anywhere from $50,000 to maybe $150,000 by the time the whole thing's taken care of. Well, where are you getting that money? Most small businesses aren't going to have that kind of cash sitting around. And even if they do, it's certainly going to crimp your cash flow rather severely. So the important thing to understand about insurance is one of the benefits is that it will pay your defense costs. And that means that it will pay your attorney's fees. And in fact, many insurance companies have what are called approved defense panels, which are attorneys that they've already vetted and approved for your specific niche. And they've already worked out payment schemes with them and what have you. So in that case, you would have to pay your deductible, whatever that is. And then after that, the insurance company is on the hook for the rest of the attorney's fees. That alone makes insurance incredibly valuable. The second problem that you run into is, let's assume that the matter goes to trial and a jury finds your company liable and they award damages of $800,000 against the business. Okay. Well, if you don't have insurance, your next step is bankruptcy court. And your business is pretty much going to be done. You're just, they're going to liquidate the assets and give that money to the plaintiff. The plaintiff is the party that sued. And, it's nice meeting you. If you have insurance in place, and let's assume you have $1 million in coverage, your insurance is going to pay that $800,000. You won't have to pay a penny. That should be a rather obvious benefit. So insurance, really the two primary benefits that you're looking at is you're going to have any judgment or settlement covered up to your policy limits, and you're going to have your attorney's fees covered. And those are two very, very important things and very expensive things. And so buying liability insurance is really a no-brainer. And that's particularly true when you figure out that the premiums are probably going to run you something like $100 to $200 a month, which is almost nothing compared to the potential, costs that you're facing if you do get sued. So, insurance for an online business, should you get it? Yes. Yes, yes, yes. So, let's move to the next subject, the actual nature of the policies. The insurance industry runs about 20 years behind business developments. They're really slow. One, the companies are huge, so it takes them a long time to pivot and to address new insurance needs. And then two, the policies that they write Insurance companies have such little credibility that states will require their policies to be approved first. So they have to go to each state, present the policies that they want to sell, and then they're reviewed against standards maintained by each state and then approved. It's a complicated process, but it takes a lot of time. And so for a long time, when I first started practicing representing online businesses, you couldn't get insurance because nobody wrote it. It was just very difficult to do. The good news, partially at least, is that now you can. The bad news is most of the policies are crap. What you have is insurance companies will often not write a policy that is specific to the risk that you face when you run an online business. Instead, they write a general policy that they would have sold to somebody who has, a shoe store in a mall, and then they slap a small rider onto it that supposedly addresses internet issues. And, as you can imagine, that probably doesn't work out well because most of the policy is devoted to things like, well, what if a customer slips on your premises and hurts themselves? What kind of coverage will there be? How much coverage, from a dollar perspective, does that include? Well, most online businesses, unless you're one of the bigger boys, you probably don't even have an office, much less a retail space. It's probably you and your partners working from some specific area, from your homes or whatever. Maybe you have some remote workers, things of that sort. So you don't need that coverage. And there's no reason to pay for it or any of that kind of a thing. So a lot of these general policies are just not great. And then when you actually read the small part that was added for the internet, maybe it covers things that aren't really a huge concern, such as, the damages associated if your website goes down, your lost revenues from that, things of that sort. When really the issue that you're worried about is what if you get sued over something you're selling off of your site, or something that somebody says on your site, to another person, like a defamation case or something of that sort. So just understand that because you have, an insurance policy for your home, that company probably isn't the optimal company to ask if they'll cover your internet business as well, because usually the policies that they provide are weak. And we've seen more and more cases of that popping up recently. So how do you read a policy? How do you figure all this out? Well, the way this all is going to work is that you're going to contact a broker, and a broker is going to give you a general application. You're going to go ahead and fill it out. I also suggest that you go ahead and create a narrative about your business. Here's what the business does. Here's who we deal with as clients. Here are some potential claims we're concerned about, whatever those issues are, so that when the broker submits those to the insurance companies, the individual who's going to review it, they're called an underwriter, is going to have, a full idea of what you're doing, and then be able to suggest, here's a policy we'll write, or here's one that we won't. And so you're getting something that's a bit more specific to your business, and you avoid that situation where, you're paying for insurance for an office space that you don't even have. Now, at that point, you're going to get a quote sheet back. It's usually 5 or 6 pages. 4 of the pages will be marketing materials promoting the broker and the insurance company. And the 1 page will list the premiums and what have you for the policy, as well as the deductible, and then a list of the actual forms that will make up the policy. At that point, you may be asked to approve it, and the answer is no. You want to see instead something that is called a specimen policy. And what will happen is they'll put together the actual policy and present it to you. Now, it can be anywhere from 20 to 60 pages long. And it's the kind of thing that a lot of people don't want to deal with and don't want to read, but it is very important that you do, because the policy is going to contain language that's going to define what is covered and what is not. And you would be shocked at what is not. So with the specimen policies, the first thing you want to look at is what's the coverage. And it's going to say something along the lines of, the insurance company will provide coverage to the insured for wrongful acts, and wrongful acts will be capitalized. And then you have to go into the definitions and look and see what is wrongful acts, what's the definition, and they'll have specifics there. And maybe your business is covered, maybe it's not. Does it cover situations where you've, maybe signed a joint venture with another party? So you're going to need to read through those and read through all the definitions to make sure that they all apply. And then the second area that you want to look at, which is very, very important, is the exclusion section. As the word suggests, this is where they're going to limit the policies. So a common exclusion that you'll often see is they'll say this policy will not cover claims for copyright infringement or trademark infringement. Well, if you have a online business where copyright infringement claims could be a potential problem, or trademark claims, obviously, that exclusion is a serious problem, because if you get sued, for copyright infringement, well, that policy is not going to cover you. You're going to have to come up with your own money for your attorney's fees. You're going to have to come up with your own money to pay any settlement or judgment. And that's a huge problem. And so, obviously you would want to address that with the broker. You want to keep a list of things in the specimen policy that you have issues with, or even that you have questions with. So reading through the exclusions is incredibly important. You really want to do that. So, make sure you take no dose, or, drink a couple 5-hour energy drinks, whatever it takes to get through those. But make sure you read them. And then finally, riders. Insurance policies will sometimes be amended after the fact, and they'll be near the back, and they're called riders or endorsements. And basically, these are changes to the policy. So there may be a clause that was written into the original policy that was invalidated in a lawsuit, or a state is requiring something different, or the insurance company just decided the language was poor, and then they will update it with an endorsement or a rider, and it'll say in the back, section 3 of the policy is replaced with this section. So just make sure you read those, make sure there aren't any fundamental changes that are occurring. If you don't understand insurance policies, or you're uncomfortable reading them and interpreting them, then my strong suggestion is hire an attorney to look at it. It'll probably take an hour or two, and the attorney can point out any problem areas. Once you have a policy in place and you've paid for it, if nothing changes from year to year, the insurance company will often just renew it without any changes to the term. So if you get it right at the outset, that policy may last you 5 or 6 years, as long as you keep making the annual payments. So let's look at the nuts and bolts of the finances of it. When you get a quote page for your policy, it's going to list a premium. The premium is usually expressed as a one-time payment for the entire policy. So it may be $1,500 or $1,200 or $2,500, whatever that figure is. You can always get premium financing, where they'll spread the payments out over, say, 10 or 12 months. It's not like getting a loan for car insurance or something. You don't really have to qualify because the payments are for such a short period of time. They just give them to you. I've never heard of anybody having a problem getting any kind of payment plan in place. So you always have that option. The policy itself, the coverage is going to be expressed as 2 large numbers. So let's take a policy that's $1 million and $1 million. So it'll be $1 million / $1 million. The first $1 million refers to the per claim coverage. So if you get sued and a jury awards damages against you for $900,000, that would be covered, because the per claim coverage is $1 million. The second figure out there, the second $1 million, would refer to the aggregate coverage for the entire policy period. So that means the total amount that the insurance company will pay out, regardless of the number of claims during the term of the policy. So if you get sued and you're hit with that $900,000 judgment, the insurance company pays that, you would then have effectively $100,000 in coverage left. If you got sued a second time and a jury awarded damages for $150,000, the insurance company would pay the $100,000, and you would be on the hook for the $50,000. So the policy isn't just going to pay, everything. Now, if you're running a business that's aggressive, or it's in an area where there's a lot of litigation, the answer, if you're worried about policy limits, is to raise your policy limits. You can always get higher policy limits, and you're going to pay a higher premium for them, but you can always get more coverage. At some point, that will top off. But even then, you can ask the broker to go find what's called umbrella commercial coverage, and that will be from a second insurance company typically, and they will write additional coverage for you. And they'll say, okay, if this primary policy is exceeded, our policy will kick in for up to $10 million or something of that sort. So if you're in an area, if you're running a blog, that's politics, and it's, conservatives and liberals unite, and you have a forum, and, what's going to happen. There's going to be defamation claims right and left, and people will probably be shooting each other and what have you. And you're going to be getting dragged into lawsuits right and left. You'd want to have a policy that's going to have healthy coverage, and an umbrella policy would probably be pretty wise as well. So So that's pretty much it for insurance for an online business. Should you have it? Yes. Yes, you should. It's there for the scenario where, the proverbial crap hits the fan. It's kind of similar to your auto insurance. You probably pay it every year. Maybe you've never ever had a claim and it annoys you that you pay it every year. But if you run into somebody, you're going to be happy that you have that coverage. So it's that kind of a deal. So if you have any questions or comments, or you need any help with the specimen policy, feel free to contact me at SoCalInternetLawyer.com. Just use the contact page. I'll get the message. Please consider subscribing to this channel. We'll be posting videos all the time on various online business topics, including internet law topics. And I think that's about it. So have yourselves a good day, and hopefully we'll see you on the next video. Thanks.